Alright, so this is a video I'm going to do on just preparation for the week to figure out what the trends are doing, the high time frame and the lower time frame. As you can tell, this was the base in the euro. Top is the high time frame, lower is the lower time frame. So looking at the euro, and it's in a clear uptrend. There's no evidence of supply whatsoever. So the support area should be right around this area is support. There should be buyers right here. If it gets down there, I don't know if it will, but the stop would definitely go here. And I just need to be cognizant that this is an uptrend. You really don't want to short, because it won't help. The line of least resistance, aka the trend, is up. So let's go into the YM. That was a support area. It was a low volume area, so then broke down. All it did was test, and it's so obvious it's so obvious that this is the support that when it was pulling back, people, I don't know what. So this is the area to look at, and you know exactly which areas to get into. So broke out, pulled back, did an A, B, C, bing, 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 boom. That means markup. It may pull back right into this area, so I want to be cognizant of it. But after this correction is over with this bar. 1, 2, 3, bang, it's over. And it's a nice thrust. So indexes are in an uptrend. This market here, the crude market, is very interesting because they try to break it, or I don't know, maybe they try to do something with it. The heavy volume came in right here. Alright, heavy volume came in, but one group must have sold and another group must have come back to accumulate this level. So although you have sellers here, this was what in Wyckoff is known as shorting of the thrust. Alright, and this here is selling. Alright, it's very evident that this market was in danger of a complete breakdown. After you have a shorting of a thrust and you have selling, this is typically, many times, this is how new trend will come to fruition. But there was no markdown bar. What you had was a test of this area. They try to break, force selling, and on all this amount of volume, it was unable to make progress, which means these guys who bought here were buying this selling. As one group sold, another group bought, and now you're at a very interesting area. You're back at resistance at the area of shorting of the thrust. So in my opinion, let me just take a look at the tape here. That was the effort reward. Definitely want to label that. That was the end of the correction, was identified by this bar. Continuation. You can call it whatever you want. It doesn't really matter. It just means that we're done with the correction and it's continuing higher. But there was still sellers present in this area, and they sold, but couldn't do any damage. So the buyers are willing to absorb. See this? 1, 2, 3. It's highest since the selling, and within 3 bars they bought more than what they sold within 4. About 739, about 747, 795,000. So they just bought it all back. So in any case, it's going to be hitting this area, okay? And this is a dangerous area. This is where the initial selling came. So I'm looking for a breakout, because right now I just see no supply. Supply attempted and failed, and they must have covered, or they're going to cover. I really don't know. All I know, here no supply, here no supply. There's no evidence of supply after the sellers came in, absorbed, sell. This was effort, absorbed, thrust. meaning we're going higher. But it is at a resistance area right now, so don't be surprised if you go up to there and the first attempt fails and they pull back a little and gain more strength and do their thing. Alright, gold also is the same situation. This was selling, and it's interesting how when a market is in danger of a breakdown, two things can happen. They can fail and retest and then break, or this scenario, which is, well, it's like saying, I don't think so. One group attempts to break, and another group says, no, you don't. We have plans for this market. And one group can get out, another group can get in, or it could be the same group that changes its mind. We don't know what's going on. All we know is that this was some type of climax, this heavy buying volume. Then they sold, took it, went right below support, which is, this is the support area. After the climax, this is the rally low. The rally low is the support. And they penetrated, and immediate violent buying. This was that danger area. This is known, that definitely for sure is the danger area. And you saw that the selling started from this area of resistance around wherever this is, 1220. Sell some more, thrust and see if you can break it. And I don't think so. Bought right back. Boom, 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 boom. All green, 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 green. That means they have plans for this market. And it's already taken out the high, right, with a thrust. That's exactly how you want to see a breakout. You want to see a breakout. It's not a normal breakout. It's accumulation backed breakout, which is totally different. Alright, that's a legit breakout, because they buy low and they want to sell high. So you want to see buying and then a breakout, meaning it makes sense that they're going to buy and then break out so they can sell at higher prices. So that was the breakout. You could even maybe a markup bar. So it certainly has the characteristics of it, but from a reaccumulation range. And then it went down on I don't know what this is, 144,000 contracts. Couldn't do any damage because it's about halfway back. Low volume test right here, and now they're going to continue higher. So again, this market is also in what? Uptrend. This market here is getting extremely interesting. The reason is there are a very, very large number of shorts in this market. This is the treasury notes. And if this market just goes a little bit higher, it's going to force that covering. And that covering could create a violent rally all the way back up to here easily, like no sweat. And this area is also untested. Markets don't just go down. They break, they test breaks, and they test the breakdown, and then they continue. This is always the case, or at least most of the time. So that area. Anyway, what I want to see, I see some buying here. They have this little red bar, but really it's 1, 2, 3, 4, 5 bars in a row. This little red bar tries to confuse you, but don't get confused. It's buying. And then, I don't know, on the right hand side, this right here shows me a lack of supply. Here, lack of supply as it comes down to this area. So what I want to see is a thrust. If I see a thrust, I know this bitch is gonna fly. Alright? Because if I see a thrust and they get above here, bing bing, it's gonna go higher because they will cover. Their stops, I tell you, they took out the stops here. Very likely the areas where the stops are, and this breakdown right here against this big thrust, there should be stops here that they want to target. So those stops cover can cause rallies. So we'll see if that's what happens, or it could fail and just continue the downtrend. I really don't know what's going to happen. I wait for it to happen and then just enter the retest, because there's an infinite number of scenarios that can happen, and generally it can either go up or down, but it's not that simple. It can go up and then down, or down and then up and then down and back up. So all of these scenarios can play out. I do know one thing: the left hand side is bullish. That's the left hand side. That is bullish. That's basically 5 green bars. Yeah. And the right hand side is yet to be determined. Alright, yen, blah blah blah. That was the markup bar. Very important to understand what this is, because again, I'll tell you the most important diagram in trading. Don't give a shit what anyone says. I'll tell you, this is the most important. If you understand that trading is nothing more than a business of buy low, sell highs, and then sell high, buy low, just like any other business. This right here is the most important diagram there is. This S-curve, where you have accumulation typically occurring in waves of buying and selling. That's how accumulation occurs. It's not really one bar accumulation. Accumulation is never one bar. It's always a number of bars. It always occurs in waves. So they accumulate, and then what happens is they come here and boom. So you have this accumulation occurring because supply and demand reveals itself in waves. That's market structure. Alright? And waves create trends. So you accumulate, then here you have a markup bar. The markup bar distinguishes accumulation from the markup phase. Alright, it's like a delimiter. Markup, just write markup, MU is fine. So you have accumulation, then you have a markup bar. The markup bar distinguishes accumulation phase from markup phase. Then what you have up here is distribution. And in reality, it could be reaccumulation and all that, I understand, in the middle. Like what you're seeing in gold, right? What I showed in gold and the crude, like over here, they move up and then basically reaccumulate here or here, reaccumulate, and that's fine. But the cycle is actually this. So in the middle they'll reaccumulate, but eventually you get up here to the distribution area where they'll be selling, but that selling will have follow through. And that follow through will come blah blah as the mark down bar. Alright, the mark down bar will initiate the mark down phase. Mark down phase. Most important is understanding accumulation, markup, then you have distribution, and markdown. Now in the middle here, what separates these two can be, first of all, is the mark up bar. You'll see this in so many trends that I believe it's built in to trend structure. You have mark down bar, okay, and in the middle also you will have, between markup and distribution, you will have accumulation. And in the markdown phase, this connects back to accumulation, but in the middle of it you will have redistribution. Okay, that's basically what's going on in here. This is the most important chart in my opinion there is. I saw it in the Wyckoff course, but without all of these details. It was basically accumulation markup, distribution markdown, and that's all you really need to know. But it needs a little bit more detail, meaning how these things start and end, and the markup bars and reaccumulation and redistribution, blah blah blah. Anyway, what was it? So coming back to this, what you see here, reaccumulation occurred right here. And now they're going to go higher until they find an area to distribute. So what am I learning from all of this? I'm learning that on the Dow, 19,850 is a very important level. So you want to go to the lower time frames, right around here. There will be buyers, very likely. I'm saying very likely, I don't know for sure, but it should be right there. Next is the crude contract. Crude, want to write that it's at resistance. So we go here. It's nearing resistance area, so I'm definitely not going to buy it, but just know that it's nearing resistance. Alright, so that's the overall comment. So YM is in markup, and that's a support level right there. So you want to go to the lower time frames and identify that. Breakout occurred, and now for crude, it's nearing this area. So now what are potential possibilities? Absorption can occur. You see it start hugging resistance, or they can reject the area and strong selling can occur. And if this is not reaccumulation, if this really is a distribution campaign, then this whole thing right here, 1, 2, 3, 4, 5, this whole 5 could occur again. 5 bars of selling could occur again. That means what they're trying to do is try to get the best average price. So, they have a lot of inventory, so come up here and get the best price. Then just take it back up, getting to this level and trying to get the best average price and sell again. So they're just trying to get the best prices for their selling campaign. So that could occur if this is not reaccumulation. If it is reaccumulation, then in this area you won't see this selling. Instead, you might see absorption, or you might see a slight pullback or ABC correction or something like that. That's tagging this area right here. So we don't know what's going to happen. Let it happen, and then we figure shit out. But here on the euro, important area, support area needs to be noted. And let's note that. Ooh. You see, even the lower cycles have markup bars. It's everywhere. You just gotta know. What the hell am I doing? What comes down here? Got tagged already. Well, this right here looks like selling, like they're trying to get the best price. See this? You see this? Comes over here and then they sell. See that selling? Boom, 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 boom. Then take it right back up and do what? More selling. So it seems like they're trying to get the best average price. I don't know yet, but it really does seem like they're selling, bringing it up, then selling some more. And that is characteristic of distribution, and trying to get good prices for whatever it is that you're selling, so the buyers are buying high. And this right here looks like a false breakout. See that? It goes up there, fail, 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 blah, sell, sell, sell. And now they're trying to take it back up. So I'm not sure yet. We'll see. Let the signals play out, and have a better understanding. So I want to see what kind of damage the buyers are able to do, and how the sellers respond. So far, there's this big green thrust, but if you see a big red thrust and it's taking out these levels here, there's a problem. Because this is already a false breakout that followed by selling, and that is not good. That's really not good. And you can go all the way low to, see on the higher time frame, you go all the way low to this area right here easily. You would still be in an uptrend. There's no threat. Wipe out all the stops under this little, I don't know what kind of bar this is, like a hammer or whatever they call it. So might just bring it down here, wipe out the stops under this bar, form a correction. So this is going to get really interesting. If that's what they want to do, easily do that. And you also know the 200. Oh boy, yeah, this is where resistance can come in, and you have heavy buying, which is yeah, I'm really not sure. Let's just wait for it to happen, and then we'll see. This bar here, very important. This is lack of demand. This could be lack of demand. If this is a red bar with a thrust down, which rivals this green bar, then the game gets really interesting. For gold, nothing to say. They reaccumulated, and they sold this area right here. The test was right there, and the rally occurred. So far it's green, 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 green. I don't really see any threat yet, but you do have to note this, and we'll see if it occurs again. If it doesn't, you can just go straight up, because this is pretty strong. This is a very interesting game here. What you want to note is right here, you got it. I'm sure this was some type of oversold condition at some oscillator somewhere, but this means the lack of volume, and this is also known as what? This precise, the way this looks, if you study shortening of the thrust, that's how it looks. Alright, so the question is, after the selling and lack of supply, you see accumulation or buying or whatever, and after that usually you get something like this, but it's just reaccumulated right back. So you have buying, selling, buy it all back, and I think this is a very, very interesting time to take a look at the treasuries, because they can really move it much higher. It was very oversold, very, very selling without testing, and selling without testing creates a atmosphere of what's called, either a weak technical position or a strong technical position. So without getting into all the complicated details, they can really do a lot of damage here. So what's noteworthy? This green followed by this green, followed by the fact that you're not making lower lows anymore. High, high, low, higher, high, higher, low. Yeah, we gotta take this area out, and then we'll see. So let the bulls and bears fight it out, and let's see what the result of this wedge is. I think that you see this one here, shortening of the thrust. take a look at how this entire rally started. See that? That's called a shortening of the thrust. And if you pay close attention to the shortening of the thrust, you'll notice somewhere over here there was some type of shortening of the thrust. You know, this is very clear. This is a good. I don't want to talk about catching tops and bottoms, but if I was to try that, the one thing I would definitely look for is climactic action followed by shortening of the thrust. Again, watch. Climactic action followed by shortening of the thrust. What happened? Uptrend. Again, climactic action followed by shortening of the thrust. What happened? Temporary up correction. See that? Climactic, shortening of the thrust. No more sellers. Market is heavily what is it? It is buying can cause a big run up. It can, you know, it's sensitive to buying because you enter. This is what really creates the oversold condition. A climactic move, always climactic move followed by an immediate change of behavior in the form of a shortening of the thrust. Same thing here. This is 6-1. This is 7-1. Boom. This is what? 8-1. That creates climax followed by shortening the thrust creates an environment that a little bit of buying can force price up. It can pop up, and traders realize this, and that's why you had all this. Alright, so done with that. Yen, again, the markup bar, continuation markup bar. This was a nice markup bar right here, and actually this was it. That was the accumulation. Test, 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 bang. Markup from here to here. Correction. Now ready to buy again. Boom, boom. Green, 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 green. It's either this bar or this bar. You know, indicator quoted over here. Alright. So this was a little baby trend, or whatever you want to call it. Then you had a test where you're supposed to get in, and now we'll see what kind of damage they do, and if this trend is over. A lot of people, when they see this, they do this. You know, this is a good example of when you want to use median methods. And you see it's, you know, you want to see this lower channel, how it bob and weave, you know, goes to the top. 80% of the time supposed to tag the median line and reverse off of it. I don't really use this, though I'm familiar with the method. I just use one, and I'll just look for selling. No more market geometry. So this is what I want to pay attention to. This area here, and see how it performs when it gets back up over here. Alright, up to the resistance area. That's the treasury note. Okay, we'll see. Alright, I'm done.